A money alert, Halloween is over, starting to signal the beginning of the 2021 holiday season. It's also when financial experts at Ferguson Wellman look ahead to the new year and what's to expect in 2022. Today we're joined by Mary Lago, Executive Vice President for Ferguson Wellman. Thanks for being here today.
My pleasure.
Well, it has been a strange year, I would imagine, for you folks, to say the least. What have you taken away from this year, and what do you think you can project forward into 2022?
Well, it's been an interesting year from several perspectives. Certainly, we've seen COVID and an amazing recovery. We can look back at the market and look at the absolutely stellar returns that we've all enjoyed. While we've started to see some inflation, really, even the real return that investors are keeping in their portfolios after accounting for that inflation is still pretty spectacular. We're seeing some downward pressure with rising interest rates on the bond side of clients' portfolios. And so thinking about how we position for that going forward, with that likely to continue in the new year. In general, what we expect for next year is more of a return to normal, more stabilization. So yes, we think we're going to have a little bit higher inflation for a period of time, but that's broadening out beyond just the reopening or the hospitality sectors of the economy. And so we're likely to see those inflation numbers start to decline in the new year as we see some reprieve with more workers coming back into the workforce, the labor dislocation starting to reprieve, and that helping out with the supply chain issues that have been driving a lot of the inflation.
So I guess that's my next question is, if we talk 1 year from today, will inflation be the first thing that comes to mind? Will $4 or $5 a gallon gas be putting pressure on folks' bottom lines at their home, even if they're not lucky enough to have money with you folks or someone else?
Well, of course, it's very difficult to say exactly what we're going to see 1 year from now, but we do think inflation remains a little bit elevated for the foreseeable future. But by the end of next year, we shouldn't be talking about 6.2% year over year inflation numbers. We think that's unlikely.
In general today, I know the NASDAQ set a new record, but the Dow took a hit. I won't ask you to explain all that for us in a short situation, but overall, do you think we'll be looking at more records 1 year from today, or will we be in a much more flat environment, do you think?
We do. We think we'll be looking at more records. Now, don't hold us to the day because the stock market is volatile, and we think we'll have more volatility next year. But overall, we have a saying, so go earnings, or excuse me, as go earnings, so goes the market. And what we expect right now, we've had amazing earnings growth this year, up over 40%. We expect next year looks maybe closer to a 7% earnings growth. But again, if the market followed suit, that would tell us we'd still have some nice returns out of the market next year.
Mary Lago, Ferguson Wellman, we appreciate your optimism and your time today. Thanks very much.
Thank you.